Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Thursday, June 18. The year's 2020. Let's talk trading. Do not break your rules. This week, I guess we've been featuring you had your method, your plan, you know, and you have to have your rules. And once you establish your rules, don't break them. Because if you break your rules, then you're not being consistent. And if you're not consistent, then when you look back over your trades, basically it's all meaningless. Because it's like, how can you tell what you were doing? So, bottom line is, don't break your rules. And just so you all know, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. And also, one of the rules you better not break is you better not lose any more on any one particular trade than you're willing to lose. Because you don't want to have the regret of being stupid. Okay? And I have Walmall on the line, and we're going to share some of the rule breaking that we've been doing. Just so you know, we're not perfect. We do it too. We have the same struggles.
You're absolutely right. That's a human struggle. We do it all the time. We set up structures in front of our lives so that we can go and mitigate against dangers and at the same time take advantage of opportunities. But I think that we as humans, sometimes we think we know better than all the time and practice that we put in, and we get ourselves into trouble. One of my rules is that, if I get into a trade and it goes against me, until I go and hit a certain point, I continue to trade. And so I'll tell you, the story about what I did this morning, which was breaking a rule that, cost me money because I took a loss. And to be honest with you, the loss wasn't my fault. I guess it was my fault in the sense that I got into the trade.
You did it to yourself, Walter.
That's exactly right. You do it to yourself. So I was the one that took the risk and got into the trade. But what happened was when I got into the trade, for whatever reason, the market just went and it popped. And my spread went from basically nothing to a spread of like some ridiculous number, 7, 8 pips, something like that. And next thing you know, I'm down 7 or 8 pips. And I haven't even gotten in yet. I didn't even have time to get a stop loss in yet, and that happened. So what I did was I wound up and just said, okay, this has gone against me. I've gone down 7, 8 pips. It's now the trade is actually going in the opposite direction that I want it to go in. I'm getting out. And so I got out and wound up actually taking a pretty big loss, about 15 pip loss. And, that stuff is going to happen when you trade. I can't control what brokers are going to do. I can't control what the market's going to do. All I can do is I can go and try to get my stop loss in right and get my take profit in right and take the trades when I'm supposed to. Follow the rules and do that. Well, I followed the rules in terms of getting in, but the market went against me. But where I failed was if I would have just stayed there, what I did was I got up because I was so aggravated. I got up and walked out of the room. But if I would have just stayed in the room and stayed there for about 15 minutes, waited for the market to calm down, I could have gone back in, got my trade, and I would have more than made up that 15 pip loss. But I did not trade my rules.
Yeah, but you did trade your rules later, and you got the break, and you did make it up, right?
Yeah, I did. That's right. Because once I did that, it was like, okay, dummy, trade the rules. As a Sanford and Son reference, okay, dummy, you got to go and do what you're supposed to do, and you just go out there and trade what you're supposed to trade. And so I did, and what happened was I took that 15 pip loss, and then I took an 18 pip win, so now it was up 3 pips. So I was like, okay, that feels a whole lot better. But if I would not have gotten that if I did not go and trade my rules and continue it. But the reality is I could have gotten out of that mess a whole lot quicker if I had just done it, because then I wouldn't have been just up the 3 pips, I would have been up, 15 plus 3 or 18 pips, I would have been up. So that would have been nice.
Yeah. And so we're going to switch gears here because welcome to the channel, The New Traders, and welcome to the Facebook group, The New Traders. And a lot of you have been requesting and downloading the TRO Rat Zone. And in fact, I was talking on the phone to one of the traders yesterday, and he was saying how he took some losses in the Rat Zone. Now, and I told him, or I asked him, and he said he was using the M5. And I said, well, whenever you experience loss on one time frame, I mean, you have to remember, time frames are just human constructs. I mean, price is the same on all charts. I don't care which one of the chart time frames I use. If I click it, that price is going to stay the same. And so I said, well, move up to H1, because chances are when you take the trade with the H1 and you're with the H1 candle color and it's in the rat zone, there's probably not going to be too much that is going to move against you. So you can see here using the rat zone, and it also has the smart rat zone here, that if you took the H1, if you took the trade with the H1 candle color going your way, you see on this candle, last entry point was 24.22, and this candle actually hit 24.44. That's 22 pips if you nailed it. But if you look back here, there's all these other red candles. Now, the way the TRO rat zone indicator works, it looks at the current daily high and plots the zones. And a lot of people say it's repainting. It's like, no, it's not repainting. But there's another indicator that I wrote that's in the TRO Build 1200 pack, and that is the TRO Dynamic Rat. And what that does is it'll show you where the lows were for the day and where the highs were on each one of the bars. That's why it's dynamic. It's doing it the way it actually happened. So you can see here as these zones push down. Now here's one where in this dot or this box is 20 pips above this box. You can see right here price went up. There was an opportunity to take profit off of that rat zone trade. But on the next one, you can see here when price was below and you never had a bull candle. Here you had one just barely right there. There was still profit. Here, even though it spiked up, that was not a trade. No trade, no trade, no trade, another trade. So if you're having problems with the rat zone or any zone for that matter, and you're trading, say, M1, M5, M15 off of those charts, move up to the H1. And if you struggle with the H1, move up to the H4, because chances are you might not even get a trade. But if no trade means no losing trade. So, okay, my disclosure. Walmall said what he did wrong. Today, we were trading the pound, and I broke, I think, how many rules did I break? 4 of my rules?
Yeah, 3 or 4.
Yeah,
like that.
So, the first rule I broke was I was in a trade, and I think I was on M1. And I didn't take profit when the one ball appeared at the top of the candle. Like if this was right here, I did get out, and I don't remember exactly where it was, but it then turned against me, and so then I had to average in. And averaging in the rat zone, that's not me breaking a rule. But then I had a chance to get out of both of those trades with a net profit. I didn't break. That's rule break number 2. Because I would have preferred for it to go higher and make more money, but it didn't, and so then it took me down further. And then what was, let's see, so that's 2 rule breaks. There was another rule break. Oh, then as I got into the 3rd and or 4th trade, I I let the I let those trades go into profit, but then they turned against me and I didn't, exit. And in fact, my buddy Barefoot Place Kicker, actually he goes by the handle Lem out there on the forums. He said something to the effect that once you clear the spread, in other words, once you're, like if you were to enter right here, you'd be at a 26.2. If price gets up to 26.3 or more, don't let that trade go against you. Once you clear the spread, it should keep going your way. And if it's not, you need to get out because it's not moving your direction. So that's that was another one that I let. And so, but for the day I'm up, and I got out of most of the trades at the right time. But every now and then, I break my own rule. And once I see that one ball, sometimes it's going to push up, and sometimes it hits it and it comes back down. You don't know what's going to happen next. And my rule is to get out. Do I leave pips on the table? All the time, right, Walmall?
Oh, you do, but the thing is, and it's funny how we as traders trade things slightly differently. I see a 1 ball, and I look at it as that 1 ball can eventually turn into a 2 ball. So I don't necessarily get out right away, whereas you do tend to get out right away. I don't think either method is wrong. It's just that you have one set of trading plan, you have one trading plan, and I have a different trading plan. The thing that makes it important is, do we trade what we're supposed to trade? Do we stick to the rules? Because if I go inconsistent, sometimes I get out, sometimes I don't get out, what's going to happen, that wishy-washiness, first of all, that's going to go and play with my brain, play with my mind. And then secondarily, what's going to happen is I have nothing behind me in terms of statistically, and so what happens is that, I may take a bunch of losses in a row that I didn't have to. But what I do know is that if I stick to one side of this, one way or the other, I'm going to be okay. Your side will be profitable. My side will be profitable. What won't be profitable is if we're changing rules on the fly, because what happens is now you're trading on emotion as opposed to what the chart is telling you to do.
Yeah, and in fact, that's one of the things we were talking about today, and this is funny. Right here, Walmall says, if it breaks 30, I'm going long at 31. And I said, yeah, that 31, that's right where I can get out at, just above break even. So I'll be getting out and you'll be getting in. But I actually got out somewhere around here. I think I left, I think I got out around 34 something. And then I think you got out around 40, didn't you?
Yeah, I actually get out at like 42, 43.
Yeah. And so one of the things we were discussing was, do you trade the money, meaning you get up a certain amount and you exit. You made that money, whether it's 2 pips, 10 pips, or $20, $100, 500. Once you hit that amount, you're out. And then another trader will look at the chart and look for things like higher highs or higher lows, lower highs, higher highs or whatever, and then they use that to determine when to get out or when to stick. So and the thing is, you have to decide, are you trading the money or are you trading, based on the candle patterns that you see on the chart and what your indicators or might tell you what to do. And it's and there's no right or wrong way, and that's why this is, you have to not break your rules. You need to follow your rules. Just don't break them. You put them there for a reason, and that reason, one of the reasons is to make money, and the other is to keep you out of trouble. But this is one of those days, Walmall, this is the fastest 15 minutes. Maybe we might even have to make a second video because that went by way too quick. So, fellow traders, do not break your rules. Now, and always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. And once again, welcome new folks. Please click subscribe. Please click like. Click the bell to get notified. And then share this video on all those trading